it, but understanding it in your portfolio yourself is another matter altogether, and it can be somewhat complex. I'll aim to simplify things in a moment, but when it comes to understanding volatility, obviously the first place to start is measuring volatility. Now, there are lots of ways, several in fact, to measure volatility. And to me, all more complicated than the next. Although having said that, these different ways of measuring volatility certainly have their place. And if you are, I guess, less mathematically challenged than I am, you might want to look into some of these after the webinar today and familiarize yourself with some of them. But for me, when it comes to understanding volatility, I really like to apply a sort of 5-step process and keep it as simple as possible. So in terms of how I like to look at volatility within my own portfolio, I really like to start by keeping it as simple as possible. I then like to zoom out, and I'll touch on what that looks like practically in a moment. And then fundamentally really understand my performance and those price movements or perceived price movements as much as I can using data and technology. And then zooming out again to make sure that I really am contextualizing what I'm seeing when it comes to the volatility of a particular asset or industry or group of securities, to really truly understand volatility within my own investments and how that fits within my own circumstances. So the way I do that is I start by utilizing technology that's available for free within Sharesight for anyone. And I like to look at an individual asset and assess, going back to the definition that we spoke about earlier, is the price of this investment or this company moving up and down, and to what degree and how sharply? So we have something called the share checker in Sharesight. And in this example, I've popped in the security for the ticker for ResMed. And ResMed, for those of you that aren't familiar, are a health technology company. And I've looked at the volatility, I've looked at the price movements in the last year for ResMed. As you can see, looking over this time frame, there seems to be some fairly sharp price movements, both in a positive direction and in a negative direction. But this is over the course of a year. Now, when I'm investing or I'm choosing investments, I'm certainly not investing with a time frame of a year. It's a long-term endeavor as far as I'm concerned. So I really need to look at the data in the context of my own investment horizon. So then I'll zoom out and look at it for the period of 10 years. And when you do that, you can see that for ResMed in particular, the increases in price are much less sharp. And importantly, you can also see that ResMed are paying dividends regularly, and that can be an indicator of a good quality company. So zooming out helps me to, I guess, look at things with a little bit more context, but also a little bit more calm, which for me is important as an investor. So I've looked at my individual security, either one that maybe I already own or one that I don't. And that's important to note here. If you are using the share checker in Sharesight, it doesn't have to be an asset that you already own. It can be used as a research tool. So I've zoomed out. The next thing that I really want to do is I want to understand my performance. So one of the things that I've embarrassingly fallen foul of as an investor in the past is I have made an investment, generated a return, although not in this example, we'll touch on that in a moment, generated a return and given myself a pat on the back and said, "You're an excellent investor, Jessica, well done, aren't you brilliant?" And that was before I started using benchmarking. And benchmarking, which again, you can use within Sharesight for free, enables you to enables you to understand your performance and the price movements of that asset in the context of the market at large, if you pick an index that kind of covers that, or another asset that you're perhaps wanting to benchmark to. So if we look at this example on screen, you can see that MasterCard, which is an asset that I do hold, and that's shown in the yellow line in the graph, that is clearly quite volatile in comparison to its benchmark. The prices are going up and down. Although the total return is slightly better than my benchmark. So you might think, okay, I'm happy with the trade-off of that volatility because the returns are better. However, I encourage you not to stop there. Again, look at the benchmark to understand how things are shaping up in terms of performance and price changes within the benchmark. But if we look a little bit more closely, you can see that the total return tells us another story as well. So obviously I'm still in my I'm a good investor mode, aren't I better than the benchmark, even though it's not a particularly well performing stock. But then when you dig a little bit deeper, you can actually see that most of that total return is made up of a currency gain, which I personally have no control over, because when I pick an investment, I'm not necessarily picking a stock or an ETF with the movement of currency in mind, because so much of that is out of my control. So, I'm looking at this now and okay, actually the total return is largely made up of currency gains, and I've taken on perhaps a little bit more risk than I would have done if I had chosen the VDHG, which is a very popular index ETF, which I also hold. But when you look a little bit more closely again at the data and at that total return, some of the VDHG assets the return is made up of quite a healthy dividend return. So it's really looking at the data, understanding the overall performance and what that is made up of, as well as the price movements, to really build that full picture, to help you make better decisions, or at least to understand what you're seeing on the screen in context. So touching on, and then I'll zoom out again. So let's look at this MasterCard holding. At the moment, I've held it for a year. It hasn't performed particularly well. And obviously we know that past performance isn't always an indicator of future performance, but it's certainly, for me as an investor, I like to look at past performance to understand the quality of management of the company, or perceived management of the company. So for example, we look at MasterCard, and again, I've held it for a year, but when I'm investing, I'm looking at a much longer timeline, as I'm much more of a buy and hold investor. Let's look at what it's done in the last 5 years. Again, the price increases and decreases are mostly way less sharp in either direction, and we're seeing consistent dividend payments and rising dividends, which suggests that the company's performance is improving year on year, and that's great news for me as an investor over the longer term. So speaking of dividends, the other thing that's also important to think about and to use Sharesight data to understand is typically unfortunately, I'm not retiring anytime soon, so I'm not investing for income right now. So I will typically set up a dividend reinvestment plan, and due to the nature of dividend reinvestments and compounding in general, that can also play into the long-term performance and of my holding, in this case MasterCard, and Sharesight automates all of that for you as well in terms of the tracking, so you can really understand the impact of that dividend reinvestment on the performance and the price, on the performance of your assets, in conjunction with looking at the price changes that we spoke about earlier when we talk about volatility. So in summary, keep it simple. I mean, by all means, go ahead and complete the mathematical gymnastics that I'm not capable of, that we saw on the slide earlier. Always zoom out. That's one of the things that I really, really encourage us all to do, using Sharesight or Perla or any other tool that you find useful, and truly understanding your performance and what that means in terms of the components that make up the performance. So things like currency, dividends, we're going to touch on costs later. And then again, constantly zooming out again to see, okay, what does this slice of data look like in reality when I apply the same time zone as my investment timeline? And of course, contextualizing. So I think contextualizing using the data that I mentioned and the reports that we have in Sharesight, but also contextualizing with anecdotal data. So, Angela mentioned earlier the S&P 500 is down, and it's been a terrible start to the year for the S&P 500, but contextualizing local information that might be relevant to your holdings. I mean, here in Australia, we're really fortunate at the moment. I touched on low unemployment. That's, I think, the unemployment for women is the lowest it's been since 1976. It's less than the average of 4%, which is great. We've also seen, even within the S&P 500, that there are, I think, 13 companies that have over $1 trillion in cash on their balance sheets. That's great news for investors, because it means that they'll be able to hopefully weather any storms that might be on the way with all of that cash. But it's also good news for investors from a pure P&L perspective, because largely that cash will translate to either increased dividends for investors or potentially even share buybacks. So just tempering the headlines with the facts as well, I often find useful when it comes to contextualizing and understanding volatility, both inside my portfolio and more broadly, I guess.
That's fantastic. Thanks, Jessica. Yeah, I think I would say whether you're a new investor or not, tracking those dividends is key. And again, whether you're a hardcore dividend investor and you only invest in dividend stocks, or whether you're just invested in other stocks that happen to pay dividends, really important to track those when the market's down, because sometimes that little couple percentage points of dividends that you've made can really help to show that you're actually not doing as badly as you thought you would. And again, most brokers won't show you that dividend number. So if you're not tracking it in some way, then you're really missing the full picture. So again, it's really easy to do in Sharesight, but I really encourage you to do it because it makes you kind of not panic as much, that you know that you're still doing it. And of course, currency as well, as Jessica said, if you're tracking, if you're owning shares or investments in other markets, that impact on the AUD is always going to impact, the bottom line. So really important to keep track of that stuff. But thank you, Jessica. Thank you for that positive end too with the context. I love it.
No worries. Thank you.